Mr. Speaker, I rise today in strong support of efforts to simplify our outdated and overly complex tax code in order to make our economy more competitive and to provide big tax cuts to hardworking American families. Last night, the House voted to go to conference with the Senate to work out differences between our two versions of the Tax Cuts and Jobs Act. I am confident the conference committee will report a reconciled bill capable of passing both chambers because the American people need and deserve tax relief. And make no mistake, no matter what the tired talking points are on the other side of the aisle, this legislation will be a tremendous benefit to middle and lower income Americans who have been hit hardest by the policies of the previous administration. And this is a massive victory for low and middle income Americans. But don't just take it from me, let's review the facts. The House bill takes the lowest 10% tax bracket to 0. And it doubles the standard deduction, meaning hardworking Americans can immediately take home more of their paychecks. Specifically, the first $24,000 of family income will be completely tax-free under this plan. We're nearly doubling the child tax credit, and the changes to all tax brackets means we are lowering taxes for low and middle income taxpayers even as we simplify the tax code and broaden the base. A study by the Nonpartisan Tax Foundation found that in Kentucky, this legislation will create 11,782 new full-time jobs, and it will increase take-home pay by $1,724 for Kentucky households making the median income. And not only will middle-income families be able to keep more of their paychecks will grow. A letter signed by 137 economists last week, sent to all members of the House and Senate, made the case that, quote, a competitive corporate rate is the key to an economic engine driven by greater investment, capital stock, business formation, and productivity, all of which will yield more jobs and higher wages. That is why these economists are urging us to make the Tax Cuts and Jobs Act law. They note that our current corporate tax rate of 35%, which is the highest in the industrialized world, has made America non-competitive, resulting in the loss of 4,700 companies to overseas competitors since 2004, lost jobs and lost wages. This analysis is confirmed by the Tax Foundation, which concludes that approximately 74% of corporate taxes are paid by workers in the form of lower wages. Let's give American workers a pay raise. Reducing the corporate tax rate will ignite economic growth, allow jobs to return home from overseas, will increase new private sector jobs through greater investment, and it will increase paychecks. A win-win-win-win for middle-class workers and those looking to get ahead. Now, the ultimate irony is that if you actually wanted to help the wealthy and the well-connected, then you would vote against tax reform and you would keep the current tax code in place. Because it's a complicated mess of multiple brackets, high rates, and special interest loopholes. The code is a haven for special interests, tax manipulators, and the well-connected. It is an impossible frustration for ordinary middle-class Americans who need just to comply with the code, hire tax lawyers and accountants. So if you want to help the middle class, get rid of this complicated mess. And finally, Mr. Speaker, I'd like to take a moment to respond to my friends on the other side of the aisle who, after more than doubling the national debt during the Obama administration and who continue to push massive unpaid increases in spending, such as single-payer health care, government-run health care, have suddenly become gravely concerned about our national deficit and debt. Now, let me be clear. I welcome this epiphany. I welcome their change of heart, and I hope we can work together to actually address the true cost drivers of our deficit and debt. But look, last year, the federal government took in $3.3 trillion in revenue. $3.3 trillion. Our deficits are not the result of too little revenue. They are the result of members of Congress who are unwilling to force the government to live within its means. And we will never balance the budget or even think about paying down our debt without robust economic growth. Those on the other side assume that a $1.5 trillion tax cut will increase the debt by $1.5 trillion. But that is based on the absurd assumption that nobody changes behavior. when you get a tax cut. It's based on the assumption that the economy is fixed. They're wrong because they don't account for the extra revenue that tax reform will generate by creating more taxpayers and higher paychecks. And as was noted by an analysis by the American Enterprise Institute and U.S. Policy Metrics, if the economy grows by an average of 2.6%, the Republican tax reform bill will not raise the deficit. If the economy grows faster than 2.6%, the deficit will actually fall. It should be noted that in the last 2 consecutive quarters, the U.S. economy has grown at an annual rate of 3% or more. And that's in part due to the increased confidence by businesses, consumers, investors, and entrepreneurs that we will indeed make good on our promise to complete tax reform this year. Mr. Speaker, I encourage all of my colleagues concerned about the deficit, concerned about the debt, to join me in supporting the Tax Cuts and Jobs Act when this bill returns to the House floor, so that we can ignite economic growth, create new jobs, and give American workers the pay increase that they deserve. Mr. Speaker, it's their money. Let's give it back to them. I yield back.
The gentleman.